All right, let's turn now to the Federal Reserve, because Wall Street is increasingly pricing in a rate cut as the central bank will start to meet tomorrow in Washington, D.C. Yahoo Finance's Brian Cheung, who is here now, but tomorrow will be in Washington, D.C., joins us to discuss. So let's just kind of set the table. Wednesday, Fed will make their announcement. Jay Powell will speak. In terms of what you're hearing from Wall Street right now, what is the thing that traders are most focused on? Is it the new dot plot? Is it going to be the way Powell speaks? Is it any guarantees he makes about the future?
Well, as is the case with the Fed, never any guarantees of any sort. But for what's worth, Wall Street mostly saying that there's no expectation for any sort of rate change, that will end up staying at the current range of 2.25 to 2.5%. That's very different than what we see in the federal funds futures markets, which are pricing in a 20.8% chance of a rate cut. Actually, TD Securities had a great note where it said, so you're telling me there's a chance. So it's a possibility that maybe they cut rates, but I think that based on what Wall Street is saying, that's a little bit more optimistic than maybe what is the actual likely outcome.
So you're telling me there's a chance, a reference to Dumb and Dumber, which probably before your time, ironically.
I've seen it before.
All right.
You guys are in the same age bracket. Brian,
It's a large bracket.
it is a large bracket. 4 years, millennial?
Or
Close enough.
how old do you
Close
think Brian is?
enough.
He's 26.
How old do you think he is?
31.
Yeah.
Two.
Fine.
We're millennials.
Whatever. I'm rounding down. I'm rounding up. We're all millennials on these couches. Brian, I think with the dot plot in particular, this is sort of unprecedented because normally people are analyzing the dot plot in the case of a rate hike, right? Mm-hmm. But when you think about a rate cut, how is that configuration going to change? Is that policy decision making going to be affected by this dot plot?
And that's exactly why the Federal Reserve is kind of reviewing its communication practices and debating whether or not the dot plots are going to be useful. They implemented that in the post-crisis period because under Janet Yellen, they kind of wanted to telegraph to markets, hey, we are committed to normalizing rates again, getting it back up from zero, where from zero, it could only go up. So you're right, it was really supposed to be to message rate hikes. Now we're at this inflection point where the Fed is saying maybe the next move should be a rate cut, maybe it should have been a rate hike. Remember that the tone for the dovishness has really only kind of happened in the past few months. And some argue, what is the usefulness of specifically this new dot plot release? Again, we haven't seen a dot plot since March. And, it's interesting because everyone is expecting Powell to maybe signal that there could be a rate cut on the table at the end of the July meeting, at the end of the month of July. But everyone says that the dot plots will stay the same, that they will actually telegraph no rate changes for 2019, and they'll actually revise down by 25 basis points their projections for 2020 so that it'll also stay the same. So how do you also message that there could be a rate cut coming this year when the dot plot says there's going to be no change?
This is like what a lawyer does.
Just say patience and flexible. By the way, would cutting rates at this point in any way undermine the rate hikes that we got before?
Well, and that's
is that like an acknowledgement of we moved too quickly there?
Like overcorrecting their own decision.
This is the economist. Is there a zero-sum gain here? I would argue that probably most Fed policymakers wouldn't see it that way. The challenge here is that the reason why, or at least the argument being, for a rate cut at the moment is because of the trade issues that we're seeing and because of the possible economic data that we've seen, right? I mean, the jobs report wasn't so great for the month of May. The Empire State Manufacturing Survey, worth mentioning, largest decline that it's seen on record in the print that we saw this morning. So if that were to be the case, maybe actually the rate cut might have a more potent effect than the increase in rate hikes. So, I mean, it really depends on what lens you're looking at it from. But given the circumstance of what we're seeing right now, it seems like a number of Fed policymakers like St. Louis Fed's James Bullard, who has explicitly said he wants a rate cut, argues that this is a way to avoid a recession.
Yeah, and I think to your question, Dan, like the problem the Fed has right now is, I think, and I don't know what your thought would be on this, Brian, is there's still like in a very Yellen kind of Bernanke era, communication frame, right? They still kind of think and talk about things the way that people have talked and thought about things since the crisis. There seems to be a movement from Jay Powell to want to change that, and I think cutting rates would be a material step in that direction, but that's a big leap. All of a sudden, we're in a new Fed regime if they go ahead and say, you know what, we were wrong, we'll change our minds in 6 months, because usually the Fed is taking years and conferences and policy papers, because it's all about the macro theory, right? And I think Jay Powell thinks about things a little differently.
Yeah, that gets to what Melody was saying earlier, was that, for the longest time, we had what was really a 2 to 3, 4, 5 year window of Fed policy. We were going to be accommodative until we got rates back. But now we're at this point where the Fed doesn't want to, and it doesn't need to, promise anything for anything longer than a 2 to 3 meeting window. And that's simply because of the fact that right now policymakers think that the current level of rates is what the economy can handle, what they call the neutral R-star rate. So at that point, you don't need to telegraph, hey, we're committed to another 4 or 5 rate hikes or 4 or 5 rate cuts. Right. So now you have this issue where you still have the communication regime that was in place during Yellen's time for kind of that longer term window that's now kind of being changed as Powell sees that, the economy and the dynamics of all of it.
It's a different activity regime.
Right.
Basically.
I mean, even outside of the U.S., I think Bank of Japan and Bank of England are having meetings this week.
Yep.
Tell me more about the concerted effort globally.
Yeah.
Like, is Powell having deep conversations with all of his counterparts? How are they making sure that globally it's not just thinking of the U.S. short term?
I mean, I like to think there's some group Slack or some maybe like a Facebook.
That would be amazing.
Somehow I doubt it.
The most premium feature that we don't even have
exactly.
access to.
But I don't think there's a lot of explicit coordination. But look, it's no coincidence that the Fed is the first meeting, right? So they'll be announcing on Wednesday, and then the BOJ and BOE announcements will be on Thursday. So I mean, I think they're watching very closely what the Fed is going to do, and once that announcement is public, I'm sure that they. I mean, look, I think that if there were to be a rate cut, I don't think that necessarily means, oh man, we should see the BOE, BOJ, ease further. Well, they've already been easing. I mean, if for all intents and purposes, the normalization of rates, the rate hikes that we saw in 2018 was not largely the story that we saw in other parts of the world. So they're watching, but I think that they already kind of have their mindset on, the continued easing policy that they've used the past few years.
All right, Brian Cheung, thanks so much.